Hey, welcome back to the Genius Multi channel. We're going to take a look at gold and silver today, as well as a brief sideways conversation on Bitcoin here that we're going to open up with, because it's from Adrian Ash over at Bullion Vault, and I do enjoy reading his articles from time to time. And the title of this one, Tulips, Railways, and Why We Don't Take Bitcoin. So let's take a look at this company statement from Bullion Vault on why they do not accept Bitcoin. And the point they bring up here in the very beginning of the article is something that I had discussed earlier this week on why Bitcoin is failing as being accepted as a monetary unit of exchange. And that is due to volatility and instability. So here you go. So they don't take, we'll start from the beginning. No stocks, bonds, seashells, or yap stones either, please. One key requirement of money, writes Adrian Ash at Bullion Vault, is that it doesn't drop 27% of its purchasing power inside 4 days, only to regain all that drop again in the following 72 hours. This kind of hyper volatility signaled the death of the German Reichsmark amid the country's economic collapse following World War I. It's also what has happened to Bitcoin since its latest all-time high of Wednesday last week. Quote, Bitcoin, money of the future, unquote, asks this neat little video, which just won a competition run by the European Central Bank. Quote, nope, unquote, comes the video's answer, and pretty much solely by way of Bitcoin's huge volatility to date. But while cryptocurrencies more broadly are failing to find much monetary use outside the trade in illicit stuff online, for which even politicians can see they are perfect, they will no doubt play some role in our legal monetary future. And there you can see a chart above showing what you could consider stable flow of the euro, gold, S&P, and then Bitcoin's volatility there on the right. Just more volatile than the other examples given there. It's a lengthy article. I'm not going to read it all, but this is the part here where they say, so while we haven't missed the interest, excitement, and innovation building around Bitcoin since its invention in 2009, we still don't believe it currently offers Bullion Vault any commercial opportunity. All this said, there is most definitely something potentially world-changing in blockchain and perhaps cryptocurrency technology. This latest bubble, and bubble it is, also maps the boom-bust seen at the birth of other revolutionary technologies and tools in history. Think of listed shares and government bond markets, the French Mississippi, and then South Sea Bubble 1720, or railways, the British bubble of the 1840s, investment trusts, Wall Street's bubble, and then Great Crash 1929. Or, of course, the internet, the dot-com bubble, and the crash of 1996 and 2003. What about the housing market crash and the mortgage-backed securities market in 2008? So which is it for Bitcoin? Tulips or railways? I told you my skepticism, my criticisms of the crypto world will not go away. They will be with me always. And physical metals, in my opinion, are the very mitochondria, the engine within the cells of money. It all anything else can ever do is represent metal. Does that make any sense? Ultimately, gold is money, forever, for eternity. It's the root of money, the original seed of money on the tree, on the money tree. Everything else is just a branch or a leaf from it. So your crypto, if you will, if you own, let's say, Bitcoin, it's denominated in something. And it's denominated in dollars or in euros, or let's say you've transferred it into some other little mystical being such as Ethereum or Litecoin or Ripple or whatever. Ultimately, it's a unit of exchange, and ultimately, in my opinion, okay, all of these units of exchange, whether it's a dollar or it's a euro or a Bitcoin, go back to and should be tied to and are ultimately representative of how much gold can they purchase. How much gold is represented by that unit of exchange. That's where I'm at. So right now, a Bitcoin represents what? 4 or 5 gold ounces, something like that, maybe 6. So it's in that range. It fluctuates so much it's hard to tell. One day it's 3 or 4, the next day it's 7 ounces worth. So it's quite volatile. Gold is more stable and fixed, in my opinion. But let's move on here. Turks follow Erdogan's call to get rid of dollars and buy gold. I believe we brought this up at some point in the last several months, because I remember there was an article where he did call for this. The latest World Gold Council report shows Turkey has sharply ramped up gold buying, with both the central bank and ordinary people joining the rush. Bar and coin purchases, a measure of investment demand, were 47 metric tons so far in 2017, compared with 14.8 tons in the same period a year ago. Zero Hedge quotes the report as saying. Here's a chart showing Turkey buys 47 metric tons of gold in 2017. Turkish gold imports measured in billions of US dollars. Turkish central bank has bought almost 30.4 tons of gold this year. The surge in buying is reportedly triggered by state measures aimed at diversifying international reserves in light of rising tensions between Turkey and its traditional Western allies, the United States and Europe. Here's a snippet from RT. 583 tons of gold moved out of New York and Paris, Germany's repatriating gold ahead of the 2020 planned. We covered that story at length in the past about Germany repatriating gold faster than originally planned. And when you see gold moving around like this and governments taking positions of trying to acquire gold or get their people to acquire gold, you know that under the surface there is an economic or trade war or a currency war, or all three, brewing. A year ago, President Recep Tayyip Erdogan called on the Turkish public to keep savings in gold and avoid the US dollar, urging the central bank to back that policy. At the same time, the exchange value of the Turkish lira has dropped 15% since the beginning of October. The plunge inevitably makes the national currency increasingly unattractive as a savings vehicle. An interesting perspective and observations here posted by the SRS ROCO report and Economy News and Precious Metals on their site. Global gold investment demand to overwhelm supply during the next market crash. Pretty lengthy article, a lot of charts, a lot of data and quotes in there, but we're going to take some pieces of it and take a look at what they have to say. When the next market crash occurs, global gold investment demand will likely overwhelm supply. When this occurs, we could finally see the gold price surpass its previous high of $1,900 US dollars. Now, this isn't mere speculation, as we already have seen this taking place in the past. When the broader markets crashed to the lows in Q1 2009 and the 10% correction in Q1 in 2016, these periods were the two highest quarters of gold ETF investment demand. I don't really care on whether the physical gold is actually in the gold ETFs. Rather, I like to look at it as an important indicator that shows us how much investor fear there is in the market. Moreover, with the amount of leverage and debt now in the system, when the market crashes this time around, it will push gold investment demand up to a record we have never seen before. The chart below shows the amount of physical global gold investment demand over the past 14 years. As the gold price increased, so did amount of gold bar and coin demand. Again, it's a lengthy article, and put in simple terms, when the next crash comes around, which it will, we'll see a dramatic move, a shift of wealth towards the stockpiling and the hoarding of gold coins and bars. Whether it's an ETF or physical form, this will have an incredible effect on the price of precious metals, because both gold and silver will be tied to this shift. And I'm sure we will see not only constraints on the physical supply and the availability of physical metals, but we're going to see a price move that perhaps we haven't witnessed yet. So with prices low and availability quite easy at this time, just keep those things in mind as you stack metals during this part of this economic timeline. Headlines say gold is building a base for something big. This is by Jeff Clark. It may be frustrating to watch the gold price remain dormant as stock markets continue to push higher. But while cryptos and Trump grab a lot of headlines, you might be surprised to know there are significant forces behind the scenes that signal the gold market is not only strong, but suggests something big is coming. Check out these reports from the last 30 days and see what conclusion you would draw. Gold physical demand. Demand for coins and bars in North America may be low, but that's not the whole market. Check out what occurred around the world last quarter. Chinese coin and bar demand hit the second highest volume on record. In the third quarter, demand for physical metal rose an incredible 57% over the same period last year. Gold bar and coin purchases, we just talked about this, in Turkey are almost 3 times higher than last year. Bar and coin demand in Europe rose 36% versus 2016. German demand surged 45% after Germans discovered the Junius Maltby channel. South Korea demand jumped 42% after South Korea finally legalized broadcasting the Junius Maltby channel via their internet. It's admittedly a small market, but this shows once again that investors turn to gold when geopolitical tensions rise. It's clear that demand for physical metal is surging in many areas around the globe where the Junius Maltby channel is broadcast on a regular basis. Central bank demand. Global central banks added 111 tons to their gold reserves last quarter, 25% more than the same period in 2016. The Central Bank of Russia bought 63 tons, pushing their gold reserves to 1,778.9 tons. I like this quote from Russian newspaper Kommersant. If U.S. sanctions are expanded to block Russia's assets invested in U.S. treasuries, gold will be a magic wand. Unquote. The trend is expected to continue, says Alexander Losev of Sputnik Asset Management. The regulator will continue to amass gold in its reserves, decreasing the share of U.S. treasuries. Unquote. The Central Bank of Turkey has gone bonkers for gold. It reserves now more than 50 tons higher than April 2016. Here's what Turkey's gold imports look like so far from our friend Nick Laird of Gold Charts R Us. Here you can see the chart showing Turkey gold imports, and we did touch on this earlier and why that is occurring. You can see that a new record will almost certainly be set by the end of the year. Other central banks increased their gold reserves last quarter too. Kazakhstan purchased 10.3 tons last quarter and has increased its gold reserves every month for the last 5 years. Qatar bought 3.1 tons. The Kyrgyz Republic added 1.3 tons. Indonesia 1.2 tons, and Mongolia 0.4 tons. Silver, baby. Self-driving cars, solar power, and healthcare uses will demand more silver over the coming years, said analysts at the recent Silver Institute conference. Silver's role in the auto industry will continue to grow due to safety upgrades in both human-powered and driverless autos, rear cameras, night vision, rear object detection, and lane departure, reports Steve Gehring, VP of Safety and Connected Automation at Trade Group Global Automakers. Silver's use in solar panels will increase at least through 2020, says Larry Wang of Heraeus Photovoltaics. This despite panel manufacturers actively working on ways to reduce silver loadings per cell. Silver paste is used in silver panels, and this chart shows the dramatic increase expected in demand over the next few years. So there you can see silver paste demand measured in tons on the left and global solar installations there on the right, both of them ticking upward. China has imported significantly more silver the past several months, according to customs authorities. August silver imports soared 68% over last year. And there's always debate surrounding the topic of peak silver or peak gold and what actual supplies are, if they're falling or not. But here we see new silver supply is falling too. The Silver Institute's World Silver Survey 2017 publication reported some sobering developments for future supply of this precious metal. Total silver supply fell by 32.6 million ounces in 2016. Global silver mine production in 2016 recorded its first decline since 2002. Silver supply from scrap is falling and hit its lowest level since 1996. Moving on, millions upon millions of Americans have negative wealth. Negative wealth. In reading the article, we find that 20% of all Americans have zero or negative wealth. 1 in 5 households has zero or negative wealth, according to a report released this week by the Institute for Policy Studies, a progressive think tank based in Washington, D.C. What's more, an even greater share of African American, 30%, and Latino, 27% households are underwater financially. The combined impact of $1 trillion in credit card debt, $1.4 trillion in student loan debt, and stagnant wages are taking a toll. U.S. homes have regained value since the Great Recession, but many households have not. Millions of American families struggle with zero or negative wealth, meaning they owe more than they own, the report found. This means that they have nothing to fall back on if an unexpected expense comes up, like a broken down car or illness. And inequality could get worse through new tax cuts for the wealthy. Source. Well, that'll conclude the last of today's stories and broadcasts. I appreciate each and every one of you for participating, being here, checking in on the news, and staying in tune with what's going on. Just a little heads up, every past video I've just made in the last, 48 hours regarding cryptos and possible Ponzi schemes and scams, etc., somehow have been flagged. So apparently, there's people that don't like them and most likely report them. Got a lot of thumbs down because, they're fragile. Little snowflakes, little millennial crypto buyers are out there. Very, very fragile. And when you trample on their feelings, they get hurt. You hurt their feelings and they get a little whiny. And so they go tattletale for the teacher or the yard duty on the playground because, they just can't formulate their own little argument and they don't like it if you make fun of their stuff. When you say that their toy's not a cool toy anymore, they pout. And when they pout, they do the report thing or whatever. And so all of those have been flagged, delisted, or demonetized by YouTube. But, I can fight it, so that's what I do. I go in there and I click on certain things and say, you know what, review this manually because these people are a bunch of babies, a bunch of whiners. And so I've had to block a couple of people, not too many. There's just been a couple of comments that have been rude in a way. They don't appreciate it. They don't like my skepticism. They don't like my critiquing of their investment vehicle of choice. Their zeros and ones, their digits on a screen, their little cryptos. And like I said before, I've been totally upfront with it, guys. I've dabbled in it myself a little bit. I'm just playing with it, though. I'm gambling what I can afford to lose. A couple of bucks here and there. That's it. I'm not investing in it at all. I don't care if I don't make millions. When the game's over, the king and the pawn go back in the same box. It doesn't really matter to me that much. It'd be nice to get some serious gains, be able to move it into metal or real estate. But the schemes, the scams, the pyramids, the only pyramids that are worth anything are in Egypt. Everything else is a joke. And keep your head on a swivel, be observant, keep stacking, buy metals. Do not sell metals and buy crypto. Please, just, I don't know, get a weird feeling about this one. Weird little feeling in the gut. Tingly feeling. And it's not a good one. Hair on the back of the neck kind of a thing. So, lock and load your metal and be ready to execute. Boom, jump on it, get some deals on this stuff. There you go. Have a good day. And don't forget to like, share, subscribe, and if you can, support that Junius Mulby channel. Thank you.